What's going on, everyone? I'm going to do a trade recap today, and this is one of the trades I took this week. It's my liquidity sweep entry model, and yeah, I won't waste any time. We'll get right into it. So obviously, here's the trade here, and what we're looking for in this trade basically is looking for liquidity to be swept, and then some kind of inversion fair value gap or a retracement back to OTE and a fair value gap for an entry. So the main part is the liquidity being swept though, and I'm going to hop onto the 1 hour. And you can see we have all this external range liquidity. Okay, so we have a low right here, we have a low here, we have another low right here. And you notice this big candle on the push down had taken all that liquidity. Okay, so that's the main part. We want to see some liquidity taken. Once external range liquidity has been taken, then we look for internal range liquidity to be taken. So an internal sweep. So I'll just jump back down onto the 2 minute. Now I like to trade this on the 2 minute, but you can trade it on the 1 minute also. So you can see here, obviously, those are those lows, right? So we have that external range liquidity that the market had hunted. And now I want to see some kind of internal sweep. So we get that right here. So we have this low right here. Okay. So there's some liquidity. So we'll just put SSL for our sell side liquidity. And then notice this candle here does not close below it. So if you look right here, it gets swept by this candle on the push down. So that's the market telling me that, okay, external range liquidity has been taken. We just had an internal sweep. We could be ready to deliver price back to the upside. And that's pretty well exactly what happens, right? So now I do want to go over one thing. A lot of the times you'll see these V patterns, like a straight move down, and then we'll come right back up. And those moves tend to take out external range liquidity and create this internal liquidity that we like to see. So now how do we get the entry? Well, the entry is when we close above a fair value gap, causing an inversion fair value gap. So you see right here, we have this small fair value gap that gets created on that push down. So when I see this candle deliver up and close above this fair value gap, that causes an IFVG, an inversion fair value gap. And that's basically like a change in state and delivery. So when we have a close above that, we can enter the trade. And where's our target? Our target is always the opposing liquidity. So our target would be this high right here. Right there, that opposing liquidity right there. Okay, now you can also wait until price taps back into an OTE range. I do like that also. So basically you can take this swing low here, right, up to this swing high, and then wait to see if price comes back down, taps into this area, and then delivers higher. But I usually like to enter on the IFVG, but I leverage properly in case we come down and tap this area again. So just so my drawdown is leveraged properly. Okay. So that's basically the setup and the trade right there. It's not too complicated. It's actually a very good model to trade, and you see this usually every single day in the market. So again, you know, we want some kind of aggressive move, some sharp move to the downside. We then want some external range liquidity taken, which we have right there, those hourly highs. We then want to create an internal sweep, which we have right here. Okay, we get that sweep. And then once we have that sweep, we want to see some kind of change in delivery. Basically, we want to see an IFVG. So we want to see a bearish fair value gap get disrespected and then continue higher. Because if we were truly going to head to the downside, we should respect this fair value gap and then head back down, right? So once we see that internal sweep and this close above the fair value gap causing an IFVG, we can take an entry, and our target is always the opposing liquidity. So kind of this swing high right here. So that's the trade right there. You know, it's one of my go-to models. I do trade it quite a bit. So that's the entry model, the liquidity sweep entry model. And I hope this video finds you well. Definitely look for this stuff. Look for liquidity being swept. Look for internal sweeps, and then IFVGs for entries. Target, always the opposing liquidity. Have a good day. Cheers.